Today we're tackling farm coverage for the property and casualty exam. The single most important concept to grasp is that a farm policy is a hybrid, blending personal and commercial lines of insurance into one package. Think of it as a homeowner's policy and a commercial policy getting married. The exam will test your ability to distinguish between the personal and business exposures covered within this single policy. Let's start with the property side. You'll see coverages that look very familiar to a homeowner's policy. Coverage A for the dwelling, coverage B for other private structures, coverage C for personal property, and coverage D for loss of use. These cover the farmer's home and personal life just like a standard HO policy. The exam trap is confusing coverage B for a detached personal garage with coverage G, which is for barns, silos, and other farm structures. Remember, if it's used for farming, it's a commercial exposure and falls under coverage G. Next, we have farm personal property, which is divided into coverage E and coverage F. This is the commercial property. Coverage E is for scheduled farm personal property. This is where you list specific, high-value items like a particular combine or tractor with a set limit of insurance for each. Coverage F is for unscheduled or blanket farm personal property. This covers all other farm property like tools, smaller equipment, and supplies under a single blanket limit. The exam loves to present a scenario where a farmer buys a new piece of equipment and asks if it's covered. If it's under a blanket coverage F and the total value doesn't exceed the blanket limit, it's likely covered even if not specifically listed. Now for liability. Farm liability is also a hybrid, covering bodily injury and property damage arising from both the personal activities of the insured's family and the commercial farming operations. For example, if a guest slips on the farmhouse porch, that's a personal liability claim. If a cow gets loose and causes a car accident on the highway, that's a farm operations liability claim. The policy covers both. Mobile equipment used for farming is covered for liability under the farm policy. Unlike autos, which need a separate policy, livestock coverage is often included under coverage F, but it has specific limitations and usually covers death from perils like lightning or hail, but not sickness. Finally, let's talk about crops, a major point of confusion. The standard farm policy almost always excludes growing crops. To cover crops in the field, a farmer needs a separate policy. There are two main types: crop hail insurance and multi-peril crop insurance, or MPCI. Crop hail is a private insurance product that can be purchased at any time and covers damage from hail and sometimes other perils like wind and fire. MPCI is part of a federal program, must be purchased before planting, and covers a wider range of perils like drought, disease, and price declines. The exam trap is assuming the main farm policy covers a field of corn destroyed by drought. It does not. A memorable way to keep this all straight is the phrase, for the farm. Think H plus C, homeowners plus commercial. This shortcut helps you remember the dual nature of both the property and liability coverages you'll be tested on. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.